Okay, in this video, we're going to talk a little bit about some of the different bar types that we use on the charts here at Apex, and we're going to talk about identifying choppy markets and what is a choppy market and how to draw chop boxes. So this has been a big question, and with the new power play setup systems, choppy, having chop is a requirement and a rule for each of the different setups. So let's talk first of all about some different bar types. All right, so if we're in NinjaTrader here and we go to new chart, and let's just once again just open up an NQ chart. Let's talk about time-based bars for just a moment. We're all familiar with time-based bars. You can do a 1-minute bar, 5-minute bar, 10-minute bar, right? Whatever you decide to do there. And it's all based on time. Okay, so at the start of a minute, a new bar is formed, right? At the start of a minute, a new bar is formed. You got the open, the high, the low, the close, and then when that minute is done, the next minute starts, a new bar starts forming. It's all based on time. And within that 1 minute or 5 minute or whatever chart you choose, the market might move a ton, like you see here, and that within that particular minute it can move a whole lot. Or within that 1 minute time frame, the market may not move a whole lot. But either way, since there's a new minute, since the clock has moved a little bit, since the earth is rotated on its axis a little bit, you're automatically going to get a new bar. Okay, time-based bars are helpful for identifying certain things and for certain systems and strategies. But there are times where, I don't want a new bar on my chart just because the clock moved a little bit. All right, I want to really see what the market is doing. Okay, so there's a time-based bar. All right, let's go and let's look at the Apex diagnostic bars. All right, let me explain those to you briefly here. So if we go right here where it says minute, we just click that. We've got a drop down box, and we go right here to Apex diagnostic bars. You'll have access to this once you've downloaded the Apex toolkit. Okay, and we're going to use a 10 tick bar. All right, and let me explain to you what that is. Diagnostic bars are not time based at all. Time has nothing to do with them. Okay, it's completely tick based and based off the move of the market. Okay, so this particular setting I have is a 10 tick diagnostic bar. All right, and what does that mean? All right, well, for example, let's take a peek at this bar right here. So you see as the price moved up, this bar closed right here. Okay, now when the market moves, when that bar closes, the new bar opens right here. This first half of the bar is already drawn in. Okay, this bar, first half of the bar is already drawn in. So let's say that the price was coming up, this bar completed, and we jump over to this bar. Well, the bottom half of this bar is already completed, and the market's right here. Okay, and if the market goes, this is a 10 tick bar, so it already drew in these kind of false open, as it were, these first 5 ticks. All right, because this bar came up and closed. As soon as this bar opens, it's already, this green part's already filled in. All right, so there's, where the new bar starts, there's basically 5 ticks below it already filled in. And if the market moves up another 5 ticks, boom, then it comes over here and makes the start of a new bar that has these first 5 ticks already filled in. And the market comes up 5 more ticks, it makes this bar. Okay, so this is a 10 tick bar. All right, so when the bar is formed, like I said, this first half of the bar is already filled in and the market's right here. Now the market can come down into these ticks, right? Or the market can go up. Now what happens if, in this example right here, this bar closed up? Okay, it's tick based. All right, see over here the pricing is tick based, not time based. Time has nothing to do with it. So this bar came and closed up. This bar started to form. This bottom half of the bar was already filled in. The market's right here. The market comes up 5 more ticks. That bar completes. Boom. This bar is already filled halfway in, and the market's right here. But what did the market do? The market came down, right? And it even went below that already filled in part of the bar. So the market came down 5 ticks right there, and then it kept going. See that? It made a wick, right? It came all the way down and made a wick on the bar, then ended up coming back up and closed and made this bar. Okay, so when this bar closes, for example, this next bar opens. Okay, like I said, it's already filled in here. If the market goes up 5 ticks, it's going to make a new bar, right? Now, but what happens here? This bar formed, right? And when this bar closed, it made a new green bar with the bottom part of the green already filled in, and the market came up a little bit, but it didn't go up 5 ticks to make a new bar. It actually came down 5 ticks and then went down another 10 ticks, and therefore it created a down closed bar. Okay, so that is how diagnostic bars work in a nutshell. Okay, so diagnostic bars are based simply on price action, and they're designed to kind of smooth out the market. And what do I mean by smooth out the market? Well, let's just take a quick peek at something here. If I put this diagnostic chart right here, and then I moved, and this is very important for you to understand the difference of charts, because it's going to help you see chop. Okay, so I'm going to put these side by side. These are both NASDAQ charts. I'm going to go right here to global crosshair and global crosshair. Okay, so what do we see right here? We just see this big move up, right? That's pretty smooth. But what do we see on, and we see a couple little wicks here, right? But what do we see on the 1 minute chart? You see it coming up and then down and up and then a little bit here and there, right? You see the difference. Okay, it's a little more choppy, so you see that the diagnostic chart kind of smooths it out for you a little bit. All right, let's go back and look at a couple other examples here. Let's look. Now, this move down was a pretty straight move down, and you can kind of see that as well with the time-based bars as well. But let's look at a couple examples. Okay, even right here, nice big move up, and you can see that on the time-based bars. And you got over here on the left just one down closed bar, then it came back up. It's just smoother. Okay, and there's no time. This bar on diagnostics, okay, for example, this bar right here, all the market had to do when this bar closed down, all the market had to do was go down another 5 ticks to make a new bar. That could have taken 1 second, 1 minute, or 1 hour for the market to make that move, right? For the market to come up here and make this high, and then come over here and go up a little bit, and then come down a little bit, and come up a little bit, and down a little bit, that could have taken a long while, right? Let's look here at the timestamp. See at the bottom, 9:41:33. This bar closed at 9:42:19. So that particular bar didn't take a whole lot of time, did it? Okay, but let's take a peek at a couple of other examples here. Okay, this bar right here closed at 10:55. This one didn't close till 10:59. So that was about a 4-minute bar. Okay, so these diagnostic bars really smooth out the market, but you have to realize there's no time in here. It could take 1 minute, 1 second, 3 hours for a bar. Look at right here. This bar closed at 12:05:57. This bar closed at 12:12. This bar closed at 12:26. Okay, this one closed at 12:44. So from this bar to this bar, all right, see 11:59 to 12:44, 12:52, 1 o'clock. These few bars right here took an hour, okay, because it's not based on time. All right, if we were to look at this right here, on 1 minute bars, we would have 60 bars, right? Because a new bar has to form every minute, 60 minutes in an hour. Okay, let's look at it. If we go back and, or just look in this area right here. Okay, does that make sense? All right, it's not based on time. I think I lost my spot there where I was trying to show you. But just from right here, for example, 12 o'clock to 1 o'clock. Okay, see that? We've got just this amount of bars. But it would be 60 bars on a time-based chart. See that? So it smooths it way out. Okay, and that way you don't have a bunch. When you have like a 1 minute bar and every minute there's a new bar, a new bar, a new bar, a new, it gives you the impression that the market's moving, right? That it's doing something because I'm getting all these new bars. But maybe it's not. Maybe it's really not moving. It's just chopping around in here. Okay, so that is the positive thing about diagnostic bars. Now, the thing that can be misleading if you don't understand diagnostic bars is you won't always realize that the market might be in chop. Okay, what do I mean by that? Well, let's just take a look at something here. Let's take a look at, well, first of all, I want to show you an indicator. Okay, this is a very important indicator for you to learn. If you right click and go to indicators, and right here, Apex Diagnostic Bar Timer, we hit OK. All right, it'll pop up on the bottom of our chart here. See these blue lines? You can make them any color you want. They're defaulted as blue. If you want to change the color, you click the indicator and you go right here to plots. You open it up, and I personally on my charts like to use yellow. Okay, so let's take a look at something here. So we're just looking here and boom, market's going up, right? Sweet. Well, look at this bar right here that had the wick on it. Look at this yellow timer. Now look over here. If I go to the top of that timer, 6.59, right? This was over 6 minutes for this particular bar right here. Do you see that? So all we're seeing is one bar. Okay, now this was on 7/31 at 11:39. Okay, so 7/31 at 11:39. What do we see on time-based bars? See this? Right all in here. You see all that? So we just look at it as, oh, that's one smooth bar with a little bit of a wick. But what do we see that that was on time-based bars? What do we call that? Is that a trending market right in here? No, that's chop, isn't it? That's chop. You can see it a little differently here on time-based bars because the market's just right in here, right? It's not doing anything, it's chopping around. And then when it finally breaks out of chop, it goes on up. But you can see that that was chop, right? But all we see over here to the left, okay, right here, let me just move this out of the way. All we see is just one bar with a little bit of a wick pullback. No big deal, right? But that is a big deal because technically that's chop, isn't it? All right, so until you learn to really understand and see diagnostic bars for what they are, you know, the first thing you want to do is always have the bar timer on your chart. Okay, because what is that telling us? Well, we could see in here, right? There's some bars that are moving kind of fast, and then what do we have in here? A bunch of bigger bars, right? The market's taking a long time. So because these diagnostic bars are so smooth, and we use these for a lot of our systems, and we use these for the power play systems, but you have to keep in mind the time aspect and the chop aspect, right? When the market's coming, you know, let's say that you see a market coming, going up right here. Market's going up, 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 up. And then right here, if you're watching this live, see right here, 10:57. And then look at this next bar over here, 11 o'clock. So there's about 3 minutes in there. What do you think the market did in order to make this wick? Well, this bar closed up, and then it started to come up, and then it came down, and then it came up, and then it came way down, and came up, and came way down. Then it started to go up, and it came down, and it finally ended up closing up. If you're watching that live and you're seeing that market going up and down, you'll see, hey, the market's kind of chopping right there. What's it going to do? It's hesitating. It's chopping. Is it going to reverse and go south? Is it going to chop for a little bit, keep going north? Okay, so you have to be able to understand that and learn how to see, the smoothness of the diagnostic bars, but also understand the chop aspect. And that's where the bar timer is just great for that. Okay, now, when you're watching this trend coming down here, this market's moving pretty fast. You can see that, right? A lot of short bars. Okay. What do you think was going on right in here this morning? Look, this bar, one bar, took 22 minutes just for the market to move up a little, come down, move up, come down. You know that's chop, right? So always pay attention to your bar timer. And when you see that bar timer, starting to get longer, you know that the market's hesitating in there. Okay, if you just look back at this chart, you're like, oh man, that was a nice, quick, smooth move down. I love that. Well, it was, but look here. That bar took a while. That's chop. Okay, and when you see bars taking a long time, that's chop. When you see wicks on bars, that's chop. Okay, like for example, right in here. Okay. Now I want to show you another indicator. If you right click, hit indicators, this indicator will already be on most of your pre-made templates. Okay, so you won't really have to add it. But go right here to toolbar shortcut and add that. See all these drawing tools over here? We're going to talk a little bit about drawing chop boxes. You see this right here? You can click it. And right here, I'm going to go in and I'm going to draw a little box. Okay. And I'm just going to start with this box here and then show you some more. Now you might just look at this going, well, the market went up, there was one little bit pullback and it went up. That's not chop. That's a clear little uptrend with one little pullback. Well, really? What did the market do? It came up and then it hesitated here and came down and came up and came down and came up. Then it closed down and went a little further and it hesitated up and down and then it finally closed up. Then it made this bar and look, there's a little bit of pullback there. So then it hesitated and pulled back and came up and pulled back, but it finally closed up. But then couldn't go up any further. It pulled back, made this other big wick, back and forth, finally went up, went over to make a new up closed bar, but couldn't, went up a little bit, came down, came up, closed down. All within here, okay, from 10:07 to 10:12, okay, that's only 5 minutes, but the market was just hesitating there. Do you see that? What about right over here? Market came up, pulled up a little bit, came down, pulled up, came down, all within this one bar. Finally it closed, the market went down enough to try to make another bar, but then it had to pull back up and it went back and forth. Went up a little bit more, went up a little bit more, and then came down and up and down. Finally came down a little bit more, but here it kind of went back up and down. That's chop, right? That's another chop box area. That's another chop area right there where the market was in chop. You see that? Okay, and not only can you see it visually now when you understand what you're looking at, and not only can you see it now when you understand how those wicks mean the market's hesitating, but you also see it here in what? These big bar timers. See this bar right here? How long? That one bar took 4 minutes. just to hesitate and chop in here in the same area that it was chopping on this bar and chopping on this bar and chopping on this bar. Okay, that's a chop area. All right, so when we talk about drawing chop boxes, that's kind of what we're talking about there. When we talk about identifying chop or needing to have choppy, market, some kind of chop before we take a power play trade, that's what we're talking about there. Okay, and even this bar right here, when you have a bar with a wick, or this one right here, when you have a bar with a wick that takes a long time, okay, that is technically a chop in its own. I mean, there could be a chop box drawn around that. Now, we talk about chop boxes so we can identify where is the chop. Okay, where is the chop at? And so that way we can identify, and you can move them as it goes. You can click on it and bring it a little further out, or if you need to bring it down. And we draw chop boxes so we can see, hey, this is the area in which the market is chopping. So we can identify when it breaks out of a chop box and gives us other indications with our other strategies and systems and power plays of, okay, this is the box it's been chopping in. Okay, it's getting close to the bottom of the chop box. It's breaking out with some we want to take it down. Okay, because chop is a good indication that something's about to happen. I know a lot of people say, oh, I hate chop, I can't trade chop, I don't like chop. Well, you're going to find that it's the exact opposite here with some of our apex systems, especially the power play system, because we look for that chop to happen. Okay, and if we want to get technical now that we're looking back here, live we can only draw a box as it happens. Okay, and then we see another kind of chop box. In reality, this whole section here was chop, wasn't it? And if we can identify that and identify when the market's going to break out of chop, okay, or at this point we might have pulled it up to here, but when we can identify, okay, the market is choppy, it can't make up its mind, it's wiggling in between here, we're getting long bar timers. What does that mean? That means that it's not sure what it wants to do. Does it want to go up? Does it want to go down? The reason that these bars are coming up and down and taking so long is kind of what we call accumulation, right? Where the big market makers are gathering orders there. They're gathering steam. They're getting ready to bust out somewhere. So we want to be able to identify that chop, identify where the borders of that chop are, and be able to identify when to look for a breakout of the chop. And that's what some of the power play rules will show you. That way you can catch moves down like this, right? I mean, this was a nice little move from 58.90 down to 72. I mean, that's 18 points times, 4. I mean, that's what? 18, yeah, about 18 points times 4. That's 72 ticks on NQ, right? Times $5 a tick on a future, it's 360 bucks. Right, doing 5 contracts, that would have been $1,800. So don't hate chop. We love chop. We want to identify chop. We want to be able to spot it and box it in, and then look at our other strategies and systems and indicators to know when is the breakout going to happen so we can catch it. Okay, so that's a little bit about identifying chop. Now, I think everybody has a pretty good understanding of, well, how do I identify a trend? Well, trends, first of all, they're not chopping. The bars aren't taking forever. You've got on a uptrend, you've got the market moving up and pulling back. Got the market pulling up, making a low, pulling higher, making a low. You got higher highs and lower lows on an uptrend. On a downtrend, you've got what? A lower low, a lower low, a lower low. And you've got lower highs, right? This was the high of the market. Now it's a lower, market pulls back, a lower high, comes down, pulls back, a lower high than before, right? Okay, so higher highs and lower lows. But with chop, you want to be able to understand these smooth bars, watch how long they're taking, and look at the wicks. Okay, now you also want to be able to identify the difference of wide chop and tight and coil chop. And we'll talk about that a little bit here. Okay, tight chop. We consider tight chop to be where there's no more than 3 bars in one direction before it switches direction. So for example, here we've got 2 down close, 3 up close, 3 down close, 3 up close, 1 down, 3. That's tight chop, right? The market's just kind of up and down zigzaggy. And you can spot that. That's some tight chop there. That's pretty easy to see that that's going on, right? The market's coming up, goes down a little bit, up, down, up. All right, you can see that to be able to draw that in there live, right? You say, okay, that's where the market's chopping. And as the market comes up here and pulls down again, you're like, okay, well, let's just draw it out as we're going. That's our chop box right there. You can see that, okay? And you can see these big timers before it breaks on out, okay? So that's what we consider tight chop, all right? No more than 3 bars in one direction, okay? We've got a little more of that right in here as well. Granted, this was 4 and then 4 up, but you're still, granted this made a 4th bar, but it's still within this chop box area here, right? If we were drawing a chop box here, all right, we could bring it on over as the market's moving. All right, so it started off with some tight chop and then it just became a little bit wider chop. Okay, what about up in here? Coming down, up, down 3, up 1, down, up. Okay, granted this was more than 3, but when this one closed, it's where? It's still in this chop area, right? You would have still kind of drawn your chop box there, okay? Because that's not breaking out. And this bar is getting down into here, kind of getting into this chop area here. And this is just wider chop, okay? It doesn't really break out of this zone until this big move here, okay? And something I want to show you is, let's say that you just were watching this market and you're just moving your chop box over and you say, you know what, I'm just making a big old chop box like right in here, okay? Like I'm just saying, you know, I'm just saying this is all chop. Oh, sorry. I'm just saying this is all chop, right? I need to move it over here. Right in here. I just don't want to mess with this up and down. I want the market to break out. Okay? Well, and you'll see in using VAD and order prints and power plays that there's several different ways to show that. But one of the things you'll see a lot of when the market does do a break, okay, and if you've watched the VAD training, in fact, I'll just throw VAD on here real quick just to look at something. And I don't have order prints and all that up, but just to give you a quick idea, and you'll learn more about this. What do we see going on in here? We just see VAD, little up, little down, little up, little down, little, tried to push down a little further here and never made it past it. But then what do we see? We see it pushing down, trying to kind of get out of like this previous zone of chop, trying to push down. But what did it do? When it tried to push down right here, we had a little bit of push in VAD, right? It went down a little bit further, kind of where our chop box would have been there on what? Very little red VAD volume, and it exhausted, right? It tried to push out of it like a fake break and couldn't do it. And then what happens? The market starts building. And what happens? VAD starts what? Slowly building, right? And see all the VAD back in here? Where was the highest point of VAD in this box? Right here. You see it at 1222? So if I put my line there, when did VAD start to really exceed the previous attempt? See right here, it tried to push at that chop box level with what? With that volume right here. See it? It tried to come again here and push against that box level with that volume there. Couldn't break it. Couldn't break it to the short side. But here where it starts to break the box, where's VAD? A lot higher than it was anywhere back in here. And we see a slow, steady growth of VAD. that is breaking out of the box does what? Does one little pullback. See that one little pullback into the box, and then boom, takes off. And we'd be looking at a few other aspects, you know, and rule requirements with power play to catch this. But again, look at the nice run we caught up to a little bit of choppy area, then it kept on going. So see, we like chop. We want to identify chop. We want to be able to spot it to know that this is orders accumulating. The market's not sure where it's going, but it's about to go somewhere, right? Imagine like this is when like your cell phone's dying, right? You plug in your cell phone and your bars are showing that it's charging, it's charging, it's charging, it's charging, it's ready to go, right? This is your gas tank, and your gas tank's empty, and you're filling up your gas tank, and the gas tank is full and is ready to go. That's what we're looking for. So that's why it's very important to be able to identify chop and to be able to see it. Okay? So as you study these bars and learn these bars, and as you watch it live, it's a lot easier to see it, because you know, you're not just looking at it, oh, look at all the red bars down. You're seeing these wicks and seeing the market do that. Okay? So learn chop, learn time chop, learn wick chop, learn coil chop and tight chop. Okay, coil chop. Let me show you an example of coil chop. We talked about tight chop. Let me find you a quick example here. Okay, so I told you that tight chop was when there's no more than 3 bars in one direction before it switches direction. Okay, coil chop is when you have down closed bar, up closed bar, down closed bar, up closed bar. Okay, when you've got, you know, like 3 or 4 consecutive bars there, up down, that's tighter, that's coiled up. I kind of think of it like this. All right, imagine a snake, right? You ever seen the nature shows and you've got the snake slithering through the desert, right? Back and forth making an S, right? Snake comes down and up, down, you know, it's like the snake is going back and forth through the desert, right? But when that rattlesnake coils up and curls up, what is it ready to do? Just strike, right? That's why we call it coil chop. It's really tight, waiting to strike. Okay, so go back and spot that and learn the different types of chop and learn the wider chop areas. Like here, we've got a little bit of movement, right? Okay, you can do some scalping and making some money here, but even this, you could call it as, you know, really big chop zone perhaps. And when it breaks it, look what happens. So learn that. Now, couple little cheats I want to give you here. While you're learning it, if you're having trouble learning and spotting chop, couple things you could do. Okay, the power play system is all based around diagnostic bars. You have to use diagnostic bars. Okay, and there's templates made for you with everything you need on it. You'll see that in the power play training. Okay, and definitely learn to always look at your bar timer. But while you're learning chop, if you don't have a great handle on it, you could always, you know, in the background off to the side, you could open yourself up a 1-minute chart of whatever it is you're trading. Okay, whatever strategy or system you're trading, or whatever instrument you're trading. If you want to open up a 1-minute chart to have it on the side to be able to see some of that choppiness, right, where it's a little easier to maybe see those blocks of chop, to be able to be like, oh, I see it kind of chopping over here. All right, we're in chop. So like if you need that off to the side as a little cheat, you can do that. Okay, until you get a good handle on it. Another thing you can do, all right, I want to show you real quick here. I know this video is getting long, but this is super important. Like, you have to grasp this. I want to show you one other bar type with Apex. Okay, if you go to new chart, you're going to really like this. And let's go ahead and open in Q, and let's click right here to get our drop down box. Okay, and we're going to go right here to Apex Continuum Bars. Continuum bars are a mix of price movement and of time. Okay, so what do these 3 numbers mean right here? Well, this means right here that to get a new bar, the market has to go in the same direction 3 more ticks, or it's got to reverse 12 ticks. Okay, but I don't want to confuse you there. Here's what you want to do. You want to say 6 and 6, meaning the market has to, if there's a new bar formed, it's got to go up 6 ticks to make a new up close bar, or down 6 ticks to make a down close bar, right? Easy cheesy. This is minutes, meaning if it doesn't go up or down 6 ticks within 5 minutes, just make me a new bar anyway. But what I want you to do for now is just put this at 720 minutes. That's the max time we can do this. So I'm not going to get in and get into deep training on continuum bars. There's other videos for that. But what I want you to do is find continuum bars, go 6, 6, 720, and hit OK. All right. And now, when that chart opens, it's going to say, please add the Apex Diagnostic Bar Style Settings Indicator. Right-click on the chart, hit Indicator, and you can save this as a template if you want. And you go right here, Bar Style Settings, okay, and you added that indicator. Right over here where it says Automatic Size, just hit Off for now, and then hit OK. You're like, whoa, that's a little bit different looking bar, right? Okay, well, again, I'm not going to go way into it, but when this bar closed, right, the market had, this bar started forming. Remember, we did 6 and 6. That means the market had to go up 6 ticks, boom, to make a new bar. Notice this bar pulled down. If it had pulled down 6 ticks, it would have made a down close bar. But it didn't go down 6 ticks. It only went down a few and then went up 6 ticks. Okay? So, I want you to look at this right here. What happened right here? This bar went down, right, and closed down. Went a little bit further, but then the market went up 6 ticks, so it made a what? Up close bar, green. Then it kind of hesitated a few ticks here and went down 6 ticks, made a down close bar. Then it came over here, went down a little bit, and then came back up, and from where the bar started, it went up 6 ticks, made an up close bar. You see that? With these bars, for this illustration, I don't want you to pay attention to wicks. Okay, I'm going to add on the toolbar shortcut. Bear with me here, you'll see how this is useful for you. Okay, toolbar shortcut. That's going to give us our drawing tools. Okay, let's look at another example right here. What do we have? We have bars going up, right? Uptrend. What do we have here? Bars going down, downtrend. But what happens when you see 4 bars that, again, don't look at the wicks, look at the body, that are just right there in a row? What did that mean during this time? The market went down 6 ticks and a few more, and then it came back up, and then it came back down, and then it came back up. What was it doing? It was chopping in that area. You see it? Does that make sense? What do you think happened right here? Up 6 ticks, then went a few more, and then we came back down, went down 6 ticks and closed. And then we moved over and went up 6 ticks and closed, and then hesitated and down and closed, and then here, down and closed, and then here. The market's chopping, right? It's chopping right there. Do you see how kind of easy it is to spot chop on one of these charts where you do a 6, 6, 7, 20? And anytime you see 4 or more, that's chop. Or what happens when you see 4 and then right below it 4? That's definitely chop, right? Like, that's all chop right there. You see it? What happens when that market breaks out of chop? Boom. I like that. Now, we're not trading off of this chart. We're just using this chart as a cheat while you learn to read this on the diagnostic charts. So let's do this. I just want to show you how powerful this is as a little bit of a cheat. Okay, we're going to pull over the diagnostic bar chart again, and we're going to do the same thing and put them on global crosshairs. Okay, so what was happening, let's go back to this one for a minute. Over here on the right, what do we have? 1, 2, 3, 4 bars, right? Where the bodies are all right there. What do we have over here? 1, 2, 3, 4 bars. We can see that that's chop right here on the right hand chart, right? It's pretty easy to spot it. But what were we seeing on the diagnostic chart? 1 bar. You see it? Right here. Look to the left one. See where my arrow is? 1 bar with a what? With a wick and with a long bar timer. You see it? So do you see now when you're looking at those long wicks, okay, with on the diagnostic bars, what they really mean with the movement of the market? Okay, you see it over here? 4 bars just bouncing right in here, bouncing right in here. It comes down a little bit, bouncing and bouncing and bouncing, and then what does it do? Then it goes up and takes off. Over here you see the same picture. The market came up, kind of went up a little bit. It was bouncing in here, right? The market's kind of bouncing back and forth, up 6 and down 6 and up 6 and down 6. And then right here where it makes this wick and the market's kind of bouncing in this area, what do you think this is? See this bounce in here, these 4? That's the market bouncing right in here. Then when it pulls back down into the box and is bouncing back and forth, that's those 4 right there. See that? And then so the market's way down here bouncing at the bottom of this wick. And then what does it do? It decides to come up and come up and come up, come up, come up. This bar closes and it takes off. You see the same picture right here. Bouncing up here, then what? Come up, come up, come up, and it takes off. Do you see that? Do you see how powerful that is? To where until you get to just see it on your own on the diagnostic chart of, okay, we're in that chop box, I see the market kind of going back and forth and making the wick, and man, look at that long bar timer. Man, that's chop. Until you get to really spot it and see it, if you want to have one of these charts open to the side and you're just simply looking for these clusters of when they're all together, or you know, or even when they're, I mean, look at this. Okay, 1, 2, 3, 4, and then it comes down, and then it comes up. You can tell that's a lot of chop right there, right? You can see it real easy. What time was this? Like 11:45 to 12 o'clock. What do we see over here? 11:45 to 12. Look, where is that? Where is 11:45? Well, as you see it, it still is choppy in here. What did I draw? Big old chop box in there. You see it? You see how they match up? So while you're learning that and learning to identify it on the diagnostic bars, that is a great little cheat. Okay, is the 66720 continuum bars. Okay, perfect other example right here. I'm just curious. I want to see it for myself. Perfect example at what time? See these 1, 2, 3, 4? That was chop. And then what did the market do? Boom. Right? On 8-2 at 10:42. So, well, let's just global it real quick here. 8-2 at 10:42. What was going on? Let's see here, right in here. Look at that. If you're looking at this chart on the left, you just see this big move down, don't you? But look at this bar right here. See this bar right here? And see this bar and this bar had a, look at these little bar timers. Boom, 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 they're moving. But look at this one and this one. They took a while, didn't they? And see that little bitty wick right there? That means this bar closed down. The market started to come down, then it pulled up and pulled down and pulled up here and make that wick and pulled down, and then it went on down. If you're just not paying attention to the wick and to the time and the timers, you just see it move down. But when you are looking over here, what do you see at that same exact time? Down bar, up a little more. Right here where it pulled up a little more, you see that? Right, came down, pulled up, went up a little more, made that wick. Where do you think that price point right there is? It's that same wick right there. And then what happened? It came down, and then came up, and then came down, and then kept on going. Right here. You see it? You see how easy it is to see on this chart for the chop? Okay. Now, I don't recommend, I mean, it's okay if you want to, mark a chop box here. Okay. But what I recommend is when you see those four forming like that, you look and see, okay, where is the price at? Here's the bottom price and the top price where it's chopping. And I recommend that you draw your chop box. You do it on both if you want, but draw your chop box on this chart, on your diagnostic chart, because with the power play system, this is the chart you're going to be trading off of. Okay, so you want to have your chop box here on these charts. Okay, just like right here, market coming down, long wicks, long wicks, pulling down, long wicks. That's chop, and you see it right here, don't you? Okay, so that's just a little bit of some training on identifying chop, understanding chop, and a little bit of cheat there for you.